What's going on, guys? Welcome back to another video. In this video, we're going to be talking about AMC and how there is a lot of evidence that a squeeze is right around the corner. So we're going to go over exactly what that evidence is, exactly why I think the short interest is much higher than we think it is, and some of the key indicators and news that we are getting from institutions that strongly suggest that the overall market conditions and the conditions that are in the smaller area of AMC are setting up for a pretty substantial short squeeze. So as always, if you guys enjoy the information that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. And as always, there is a Webull link down in the description below. So if you guys would like to help and support the channel and get 2 free stocks while doing it, make sure you check that out. So we did see a pretty significant jump on Thursday for AMC and then a sell-off on Friday. Now, we have been seeing these Friday sell-offs over the past couple of weeks. I noticed last Friday we also had a sell-off, and that kind of suggests to me that a lot of these call options are expiring worthless, which is very important to note in setting up for the share price and the volatility going into the next week. But we do have some key information that we do have to go over with hedge funds as a whole. So we see here that Goldman Sachs sold $10.5 billion of stocks in a block trade spree. Now, I know a lot of people have talked about this on YouTube, but we can see that Goldman Sachs liquidated $10.5 billion worth of stocks in block trades on Friday, part of an extraordinary spree of selling that erased $35 billion from the values of bellwether stocks ranging from tiny Chinese technology giants to U.S. media conglomerates. Now, when we come down here, we can see that more of the unregistered stock offerings were said to be managed by Morgan Stanley, according to people familiar with the matter, on behalf of one or more undisclosed shareholders. Some of the trades exceeded $1 billion in individual companies, calculations based on Bloomberg data show. So several major investment banks with ties to hedge fund Archegos Capital Management LLC liquidated holdings, contributing to the slump in share prices of Viacom, Discovery, IPO Edge reported, citing people it didn't identify. Now, what I'm thinking is going on here is that the overall market conditions are setting up for all of these margin calls. Now, this may not have a direct effect on AMC, but this is very important to know that if more of these funds start getting margin called, we could see a massive liquidation spree and could see a massive short covering spree as well, which could really affect the share prices of AMC and GameStop going forward. Now, we also have this update for Charles Schwab. Now, due to recent market activity, we've adjusted margin requirements on certain securities. Please note, neither Charles Schwab & Co. nor TD Ameritrade halted clients from buying any stocks or selling any stocks they own. That is very important, and I think that this notice right here is going to set up for when this short squeeze does happen, that all of these brokerages aren't going to have to halt trading again. So on that one day where trading got halted and there was way more selling pressure than buying pressure that sent all of these stocks plummeting, we may not see that again. So we can see the following requirements are in place for affected securities. Stocks, 100% margin requirement for long positions, which essentially makes margin useless, because if you need, let's say, $100 to enter a $100 position, then you aren't buying anything on margin. Now, when we see here 300% margin requirement for short positions, that means you need 3x the amount of money in order to enter a short position. So if you wanted to short $100 of a stock, you would need to put up $300 worth of collateral. So what these brokerages are doing is this isn't really affecting the hedge funds. They're still going to do what they're doing on the OTC markets and making their trades. But this is going to serve as their protection so that they don't get over leveraged. And when they send these trades to the clearinghouses, they aren't going to be put in a very awkward position where they have to halt trading as a whole the next time this squeeze breaks out. Now, this 300% margin requirement for short positions is actually upped from 150%. That's what it was in February. So this is actually an increase. So these two institutional indicators, the Goldman Sachs forced liquidations and margin calls, and this upped margin requirement on Charles Schwab, suggest to me that these institutions, specifically Goldman Sachs, are trying to protect themselves from people not being able to cover their positions. And the same thing is occurring for Charles Schwab. Now, again, this is not going to affect the institutions. This is just going to really protect Charles Schwab from not putting themselves in an extremely awkward position where they have to shut down trading. So when we do see this squeeze happen, we may not see another one of these situations, as I said earlier, like we saw in January, where trading was shut off. Now, let's get into this Citadel situation that I find very interesting. And then we're also going to do some calculations and try to figure out a round number on what is actually going on with the actual short interest. So when we come over here, we can see that these are the short interest reporting instructions on FINRA. So if you didn't know, to report the short interest, it's self-reported. So when companies and institutions like Citadel find themselves massively over leveraged, if they admit what they're doing, they're going to be subject to a lot of sanctions. They will lie to you directly and not report what they are doing to FINRA. So we may not be able to see this data. So when we look at Ortex or Bloomberg terminals, the range on the short interest is about 12 to 18%, and that's with the data that is publicly available. Now, when we come over here, we can see that Citadel was actually fined $275,000 for reporting violations. Now, they've actually had violations in the past for these naked short positions. If you guys are interested in learning more about this, make sure you check out Matt Core's channel. He posted a great video yesterday about this situation, and he goes into more detail on exactly all of the different violations that Citadel has reported over the past couple of years, and it is a lot. Now, when you see that Citadel is hit with a $275,000 fine, that's nothing compared to what they would save or make because of their lying. And as we can see here, the market maker neither agreed nor denied the allegations. Now, this is very common. If you've actually watched the show Billions, you can see when all of these SEC violations come in, they usually are looking to settle and they don't admit guilt or actually deny it at all. So when we come over here, we can actually see that this doesn't really apply to AMC directly, but these are the rules that they violated. So 6730. So let's take a look at exactly what that is. So this is transaction reporting. Each member that is a party to a transaction in a trace eligible security must report the transaction. A member must report a transaction in a trace eligible security as soon as practical, but no later within 15 minutes of the time of execution. So this is just reporting the trade. So then when we come back here, we can see that another FINRA rule that they violated was 2010. And when we look at this one, we can see that this is just standards of commercial honor and principles of trade. So this one isn't that aggressive. And then 3110. So then this one is going to be supervision. So this rule requires a firm to establish and maintain a system to supervise the activities of its associated persons that is reasonably designed to achieve compliance with the applicable securities laws and regulations and FINRA rules. So essentially what is going on is Citadel sees that they can commit all of these violations and only receive a $275,000 fine. Think of the amount of money that they are making by engaging in these unethical and illegal business practices. Now, the key factor that everybody needs to keep in their heads, and I don't think that this could be talked about enough in any AMC video that you guys see, and is the key thing that suggests to me that there is going to be a significant short squeeze coming in the near future, is the misrepresentation of the short interest data across all data sources. So if you guys have seen, if you guys have watched any AMC video, the key thing that keeps popping up is that we do not know what the short interest is on AMC or GameStop at the current time. Now, the reason for this is that all of these hedge funds and institutions are able to self-report this short interest data. And as we've seen with Citadel, if they get caught, it's a tiny fine. So they really don't care. And if they are able to put this short interest data lower, they're trying to get people to sell their position, which enables them to cover their shorts at a lower price. Now, let's take a look at why I think that this short interest data, again, is so much higher than we are expecting. So when we come over to this OTC non-ATS data, this is tracking all of the shares traded on an over-the-counter system. Now, when we look here, we can see that the total amount of shares traded, which is buys and sells, this is the aggregate and gross amount. This does not suggest to us that this is all shorts at all. I don't want to misrepresent that to you guys. So it's about 2 billion, and Citadel accounts for about half of this. And the thing that you need to keep in mind as well is that Citadel is the institution that executes a lot of trades on behalf of Robinhood, Webull, and a couple of these other brokerages. So this share amount that Citadel is actually making for themselves or their other hedge fund clients is a lot lower than this 1 billion number. But the key thing that you need to keep in mind is that this is non-ATS. So dark pools are ATS data, which is alternative trading systems, which a lot of you guys probably already know what dark pools are now. So I don't think that it is helpful to get into that here. But when we looked at that FINRA article in one of my other AMC videos, they said that the dark pool numbers account for a significant portion of the total over-the-counter market. Now, this is extremely important to me because this number does not represent the entire actual OTC market. The dark pools are actually much more than this. So when we come over to the calculations that I have made, so we can see that the total non-ATS data is about 2 billion shares traded. Now, we know that this number is going to be a lot lower for the actual shares that are being held by Citadel and a couple of these other institutions. These calculations are only to show you guys how significant and massive the amount of dark pool activity could be and the difference between what we are seeing on that FINRA report and what the total number is. So if we use the significant language that we saw in that article, we can see that the total dark pool activity accounts for around 75% of all of the over-the-counter market data. Now, that is just a number that I am pulling out because that article said that it was a significant amount. It could be a lot higher because of this massive short interest situation, or it could be a lot lower. So when we take, when we try to figure out the total OTS market and the volume traded, we would have to divide this 2 billion number by 0.25, since this 2 billion would only account for 25% of the total OTS data. So we can see that this number would then jump up to about 8.2 billion in volume. That is absolutely insane. So we would see that the total activity in the dark pool, if we were to take the total OTS divided by the total OTC divided by this OTC non-ATS, would equal about 6.1 billion traded in the dark pool. Now, when we come down, that would mean about 3.2 billion for Citadel. So that's just to show you guys that there is a massive disparity of what could be happening in the dark pools. And this is also to show that this data could be massively misrepresented on every single source, and it could be so much higher than any of us think. So now coming back over to the chart of AMC, this situation gets a lot deeper than GameStop and AMC. So we are seeing these forced liquidations, which is going to affect the entire market. We are seeing brokerages brace for another massive short squeeze, and we are seeing massive misrepresentation of the short interest data, which suggests to me that we could see a massive short squeeze in the future because the short interest could possibly be massively higher than we all expect. And we are also seeing Citadel get these tiny fines that they honestly don't care about at all. They could pay these off in a couple of hours, less than an hour of their business activity. This really means nothing to them, especially with the amount of money that they are able to make because of their unethical activities. So that is going to be it for this update on AMC. If you guys enjoyed the information that I was providing for you in this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. And if you guys would like to help out and support the channel, make sure you check out that Webull link down below. It's giving you guys basically free money when you set up an account and deposit over $100, and those 2 free stocks that you receive could possibly be valued up to $1,850. So that is going to conclude this AMC update. I hope you guys are having a great weekend, and I'll see you guys in the next video.